Joining us now is Ivy Zelman, the Executive Vice President at Zelman and Associates. Ivy, welcome.
Good afternoon. Thanks for having me.
You know, when people say the worst March since the great financial crisis, I mean, let's not forget that was a housing crash. It was a housing bubble. You remember it probably better than anybody. It was a housing crash. So the fact that activity is as bad now as it was then is pretty striking, don't you think?
Actually, I think it's misleading, given that the reason that we have existing home sales as weak as we've had them has been a lack of inventory. However, inventory is now starting to rise. In fact, the NAR reported today that inventories were up 20%. So we need more inventory to have higher turnover. And in fact, our survey for the month of March indicated that we are actually going to see pending better than expected on April 30th when it's released, though I think that improvement might be short-lived if we have continued volatility that we had earlier in April with the stock market under pressure. We've had a lot of green on the screen, so that's good news. But I do think that the numbers are a bit misleading when they're reported, what was reported for today.
Well, I guess to put it differently, back then we had an oversupply situation and basically a demand crash. I don't know what you'd want to call it. This is kind of the opposite, right? There's no supply. There are tons of buyers out there who are looking, whether it's the entry point being slightly too high or literally just nothing available that's kind of move-in ready. So I assume that's why suddenly the price of a new home is a little bit less. They can build to the price point the market is demanding, and they can offer some incentives. Existing inventory kind of is what it is.
Exactly. And I think the existing inventory will, assumingly, if we have motivated sellers, we'll start to see not only higher turnover, but further deceleration in home prices. And I think that we're seeing that already, but I think it will decelerate further. I think the builders have been very prudent about offering mortgage rate buydowns, and the incentives are definitely elevated and continue to likely increase going forward. But I think with the existing sellers, they should contemplate using concessions and mortgage rate buydowns as opposed to, let's say, lowering their price or letting the house sit there longer. But I don't know that the realtor community is really pushing that, but they can do it.
Elaborate on that for a second, because that would be super interesting. And as we know, when turnover is this low, there are realtors who are making no money. There are, companies all up and down the daisy chain, publicly traded or not, that are not making money. So talk about what that could look like.
I think that if a seller is getting advice from their realtor that they need to lower their price, they might alternatively contemplate taking that same amount of money that they might have reduced the price by and using and offering the buyer or potential buyers the same type of mortgage rate discount and buying the rate down. And it would be about the same amount of dollars as opposed to lowering the price. And that's a conversation that realtors say that they're now starting to have. And I don't think that it's prevalent really in any size way now, but it could help buyers move that inventory. Sellers move the inventory.